You've probably heard the buzz, a major political promise that's now officially a law, and it could mean more money in your wallet. But what does no tax on tips really mean? Well, today, we're going to cut through all the noise and the headlines to figure out how this new tax law actually works.
I mean, just imagine that for a second. Every single cash tip, every dollar added on a credit card slip, all of it totally shielded from federal income tax. Now that is a powerful idea, and it's captured the attention of millions of servers, stylists, drivers, you name it. But is it really that simple? Let's find out.
And this is where it all started. This political slogan was a huge part of the One Big Beautiful Bill Act. But as you know, there's always a big difference between a catchy phrase and what's actually written in the tax code. And that's what we need to dig into.
Okay, here's our game plan. First, we're going to see what the law actually says. Then, we'll figure out who even qualifies for this thing. After that, we'll break down how the deduction works, look at all the fine print you got to know, and finally, ask the big question. What does it all mean for your bottom line?
Before we get deeper into how federal tax brackets affect your refund or liability this year, let's talk about something every business owner dreads but cannot ignore: properly filing your tax forms. If you're running 1099 contractors, issuing W-2s, or handling payroll forms, one tiny mistake, one incorrect TIN, one missed deadline can cost you penalties, headaches, and hours of buried paperwork. That's exactly why you don't want to be fumbling around with outdated tax software or manual spreadsheets when it's time to e-file. You need an IRS-authorized filing platform that's fast, accurate, and compliant with all federal and state requirements. That's where Tax 1099 comes in. Tax 1099 is an award-winning IRS-authorized e-file platform that lets you quickly submit all your 1099s, W-2s, 94BEX forms, ACA forms, and more without the tax season stress. The guided workflow helps you create, validate, and submit forms in minutes, and its AI-assisted checks flag issues before you hit submit.
Prices start as low as just a few dollars per form, and it integrates with QuickBooks, Excel, Xero, and other accounting tools you already use. If you want to make this tax season as painless and error-free as possible, especially with these 2026 brackets and standard deduction changes, use the link in the description to get started with Tax 1099. It's the easiest way to file your IRS forms on time without the usual stress.
So let's just get right to it, shall we? Is there really a law that makes tips tax-free? Well, the answer is kind of yes and no. It is way more complicated than the slogan makes it sound, and trust me, the details are everything. So the law itself is very real. It's officially part of the One Big Beautiful Bill Act, and it created a brand new section in the U.S. tax code, Section 224, specifically for people who earn tips. This is a real change, and it kicks in for the 2025 tax year. Okay, this right here is probably the most important thing to understand. The law creates a tax deduction, not a tax exemption. They sound similar, but they are worlds apart. A deduction just lowers the amount of your income that gets taxed. So it lowers your final tax bill, for sure, but it absolutely does not make the tax just disappear.
All right, so you're probably wondering, hey, can I get in on this? Well, it's not for everyone, and the rules are super specific. Let's see who makes the cut.
Think of this slide as the first set of gates you have to get through. First off, your job has to be on an official IRS list. No ifs, ands, or buts. Second, if you're married, you have to file a joint tax return to claim this. No exceptions. You also need a valid Social Security number, and last but not least, your income can't be too high.
And here's a look at that list of jobs, well, a sample of it anyway. The IRS has approved 68 different occupations. You've got the ones you'd totally expect, right? Waiters, bartenders, hairstylists. But look closer. It also includes cooks, dishwashers, and even people in home services like plumbers and electricians. Now, those are jobs you might not think of as tipped, so this is way broader than a lot of people first thought.
Okay, so let's say you check all those boxes. You qualify. Awesome. Now what? What are the actual rules? Let's talk about how much you can deduct and which of your tips even count. Here is the big headline number. $25,000. That is the absolute most you can deduct from your tip income in 1 year. And listen up, because this part is crucial. That's $25,000 per tax return. So if you're a married couple and you both earn tips, the cap is still $25,000 combined, not per person. Now, there's always a but with taxes, right? For higher earners, this benefit starts to shrink. If your income goes over $150,000 for single filers or $300,000 for joint filers, the deduction gets smaller.
The math is actually pretty simple. For every $1,000 you earn over that limit, your deduction drops by $100.
The IRS is also really specific about what they consider a qualified tip. Basically, if it's a voluntary payment you get in cash or something like cash, like from a credit card or Venmo, it's good to go. But those mandatory service charges, like the automatic 18% for a big party, nope, those don't count. And probably no surprise here, tips from illegal activities are out, and you can't deduct non-cash tips, like getting event tickets or most cryptocurrencies.
Okay, so what's the catch? Come on, with taxes, there's always a catch. This next part covers the really important details in the taxes that the no tax on tip slogan doesn't really talk about.
And here it is. This is the biggest catch of all. This new deduction only applies to your federal income tax. I'll say that again, only federal income tax. You still have to pay Social Security and Medicare taxes on every single dollar of your tips. That's a combined 7.65% that is not going anywhere.
And there's more. Just because the federal government is giving you a break doesn't mean your state will. You could still owe state income tax on all your tips. Also, think about this. If you don't earn enough money to owe any federal income tax in the first place, this deduction does absolutely nothing for you. And this is so important. You cannot deduct any cash you get under the table. Every single tip has to be officially reported to the IRS for it to qualify.
All right, let's get to the bottom line. After all those rules, all the limits, all the fine print, how much money could this actually save you? Let's run through some real-world examples.
Let's see how this actually plays out. Take Andrew, a waiter in the 12% tax bracket. He made $18,000 in tips, and since that's under the cap, he gets to deduct all of it, saving him over $2,000. Nice. But then look at Becky, the bartender. She made $30,000 in tips, but she hits that $25,000 cap, so her savings are limited. And Harper, a comedian, her deduction is limited by her net income. So as you can see, your own personal situation really matters.
And here's one last, absolutely crucial detail. This law is not permanent. As it's written right now, this deduction is only on the books from 2025 through 2028. After that, unless Congress decides to extend it, it's just gone.
So that leaves us with a huge question, doesn't it? For millions of workers, this could be a really significant boost in take-home pay for the next few years. But with an expiration date already stamped on it, will this temporary tax break become a permanent part of our tax system?
Well, that's a debate we're all going to be watching very closely.